Hi everyone, today let's talk about uranium. There doesn't seem to be a lot of people talking about this, as one of the most recent articles I can find is from July of 2020, but it's definitely worth talking about. Then I'll go over this article about CCJ, which is one of the biggest uranium miners in the world, and some of the risks to their company. Then I found this article, surprisingly, on r/investing on Reddit that lays out a lot of really good points. Then I'll go over the technical picture for URA, which is the Uranium Miners ETF. And of course, I'll finish up with my position in URA. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as portfolio overviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Looking at this uranium bull market article, they say the uranium deficit is growing and it's being accelerated by COVID. Pandemic-related cuts have seen a price skyrocket for uranium, making it the world's best performing major commodity right now. It's surprising to me that more people are not talking about uranium because it is going up quite a bit in price. I don't know if it's the best performing because oil and wood have gone up quite a bit also, but it's definitely worth taking a look at in terms of the growth that we're seeing right now in prices, which I will cover later in the technical analysis. They also say the situation is not likely to change in the near future, which could drive prices higher, and is set to continue based on the research done at Red Cloud Securities in Toronto. 4 uranium mines, including Cigar Lake in Canada, suspended on 23 March, and then these other mines here also suspended on 28 March, and then the one in Kazakhstan suspended operations on 7 April. I did watch a pretty long video laying out the bull case for this. And the reason that it is the case right now is because it's not economically feasible to draw uranium out of the ground at current prices, and the price needs to go up to reinitiate mining. I will link that video in the description. It is an hour long, but it's a good listen if you have the time. They say while the market had begun to tighten before COVID, many of the mine-related suspensions have accelerated due to COVID, with about 6 to 7% of total global production coming offline. They also mention in that video that current production is somewhere around 20% below current consumption already. So this would put us further below the already existing demand, and they're already saying that demand is set to rise over the next decade. They say that that deficit is set to be 31 million pounds by 2022, as several of the mines are reaching the end of their life this year, and that did not predict the 13 million pound and growing deficit in 2020 already. Additional mine closures, such as the 9 million pound Olympic Dam mine in southern Australia, and longer mine suspensions due to COVID, could push the spot price higher, closer towards the long-term price. As I was saying here before, the current production is around 37% below what is expected, which equates to 17 million pounds or 9% below global demand. Another thing that's worth mentioning here is uranium mining is not the same as other commodities. It takes significant effort to open up a uranium mine and a lot of capital to get that started, and it's not something that's done on a short-term basis. You can't just start generating more uranium, which again could drive the price significantly higher, at least in the short term, and maybe could come down over the longer term. Another example they give here is a mine that was set to open in Nigeria. The company acquired the space in 2007 and had to make changes due to the uranium downturn, and they say that construction is ready to execute as soon as prices shift. Again, reinforcing the fact that at current prices, it doesn't make financial sense to currently pull uranium out of the ground, which means that prices must go higher to increase supply. Another thing they mention here, which is extremely relevant in terms of generating new mines, is permitting. It takes significant permitting to generate a uranium mine, significantly more than other assets, again driving up prices and timelines for generating new uranium to get onto the market. They say the price will likely settle around $55 per pound, as it needs to be around $50 a pound minimum to make it economically feasible. They also mention here that there's around 55 new reactors currently under construction throughout the United States and France, again supporting that case where they say that demand is going to continue to rise. Moving over here to a pretty old article about the Cameco Corporation, or CCJ, which is the world's largest pure uranium miner. The company was down 80% off of its highs over the past decade, so it's certainly not been a great investment so far. But what I'm trying to make is the argument here that going forward, it could potentially be a good one if you don't want to invest in the uranium overall ETF, which might be the best choice. They say in 2016 it did lose money for the first time despite the falling prices in uranium, which means that the fundamentals of the company are at least reasonable, and that as uranium prices continue to rise and it becomes more economically feasible, this company should be more valuable going into the future. Another thing you have to account for is the fact that they have all of the expertise in terms of uranium mining that they've been doing for a very long time. This does give them a bit of a competitive advantage over potential newcomers to the industry. Another thing they mention here is that uranium is being looked to increasingly for a carbon-free energy source, as wind and solar have not generated the amount of energy that they were once promised. And the other thing with those kinds of energies is that they don't always make energy. If the wind is not blowing or the sun is not out, it's hard to generate enough energy, and even if we do, it is very expensive. So things like nuclear, which can take the place of coal, or plants that continuously run, seem to be the better option, at least for now. You can see the price of Cameco shares several years ago was sitting around $10 a share after hitting a high of around $50 per share. I mean, this is still higher than the prices in 2000, but if you invested in the mid-2000s, you have certainly lost money. They again re-mention the 50 plants that are currently under construction, and they were still under construction many years ago because, as I mentioned, these are very long-term investments and take a lot of capital to get started. So the takeaway here is that uranium prices are down significantly, but it seems like the timing is right to see that price rally. Moving over here to this final article, it's definitely worth mentioning here on Reddit just because this means that this kind of information is getting out and that investors are starting to see, at least a year ago, that uranium prices were going to rise. They again re-mention that $50 to $60 price range, with current prices sitting around $24 to $30 per pound, which means that there is somewhere around 100% upside over the next few years at a minimum. They say new reactors are being built all around the world, with countries like China and India leading the charge. Countries like Japan are also restarting their reactors, and France pushed any significant changes to their nuclear power back from 2025 to 2035, which is important because France is one of the largest users, if not the largest user of nuclear power. They re-mention the case that uranium can't be just pulled out of the ground. It takes quite a long time to pull it out of the ground, as well as around 2 years to enrich it to energy grade for use in reactors. They also say, the same case I said before, solar and wind need that medium to store energy when the energy is not coming in, versus a continuous case like a coal or a nuclear power plant. Another thing they mention in this article that they didn't mention in the others is that nuclear technology has advanced significantly since the time when we had disasters such as Chernobyl and Fukushima. Fukushima wasn't really a disaster, it was just a massive natural event, an earthquake that was very, very strong and caused significant issues for which it was not designed, versus 3 Mile Island and Chernobyl, which were just really badly run, which has taught us a lot of things about how nuclear reactors should be. And we've also generated new technologies such as small modular reactors, which can be built and transported to new areas instead of being built on site, making them significantly more economically feasible, which again means we could see even higher demands than are expected with the current reactors that are under construction. They even do a quick overview of waste, saying that the amount of waste from these reactors is a very small amount, and that we are generating new technologies to pull as much energy out of these nuclear wastes, which is far higher than we used to be able to before. In terms of playing this, they say Cameco is one of the biggest producers, and that it is a good bet for playing the uranium rally, as they have a stake in the 10 best uranium mines in the world, meaning that they are heavily tied to the price of uranium. But a little bit safer play is betting on the ETFs, which I already mentioned. URA is the Uranium Miners ETF, which should rally generally the same as uranium prices. There are other companies like Energy Fuels Inc. or Denison Mines, which also could potentially be good uranium plays, but I would probably stick to either the biggest one or just the general ETF if you want to own all of these companies. They go through in a little bit more detail all of these different companies, but they say, to close here, there are not very many companies that have suffered through that 10-year bear market, meaning that the companies that have survived will be handsomely rewarded for their resilience and endurance. meaning these are very good fundamental companies, and as the price of uranium goes up, they should benefit very strongly. As I mentioned, there is a 1 hour and 10-minute video where he goes very deeply into the bull case for uranium, and it's Nicholas Picard, and I will definitely link that in the description if you want to spend that kind of time learning about uranium, which I suggest that you do if you do want to invest in this commodity. Moving over here to the URA charts. This is the weekly chart. Since I haven't talked about this commodity before, let's go over the long-term price action. You can see going back to 2014, it's been a long-term bear trend. And then we had a very small downward wedge until we broke down here in the bear market of the COVID crisis, where we dropped from $10 all the way down to around $7. And since then we've rallied several 100%, around 270% to recent highs, to around $28, and we're currently sitting at $23, which seems to be right in the middle of this range. Going down here to the 1-day chart, we can take a look at this a little bit closer. It seems to be trading within a very reasonable range, similar to the S&P 500, continuing to bounce between this long-term trend lines, and it's currently sitting right in the middle of this range. So if you trade options, you could put those prices down around $20 or $21 per share, where we could see that bounce like we've seen here in October of 20, or again here in August of 21. But there's certainly potential that you could see bouncing off of this line and continuing up into new highs, somewhere around $30 or $32 per share for URA. And just to show the similarities here with Camco, this is the daily chart for them. Again, pretty solidly between these two trend lines, hitting those upper highs and coming back down to a somewhat middle range, hitting those lows and getting support. Probably could adjust this just a little bit so that we're closer to the bottom here, but otherwise staying very solidly within this range. Again, projecting a new high somewhere around $28 per share, maybe $29, from current prices around $21 per share. Seems like we may have found a little bit of support at $20, which would give you a bull run somewhere around 30 to 40% of upside. I also want to look at this on the tasty chart just so we can look at the ATR. It was getting very, very tight here in the middle of August where we saw that bottoming, and then we saw a massive rally all the way up to that $28 price range from $17.50 or so. And we are back in the middle of that range. You could even argue maybe a little bit to the downside of that range, with my projected buy point somewhere around $22 or a little bit lower, maybe here at $21.20 or so. And you can see that price laid out here. So URA is at $23.50, and it was down a little bit, just like we saw on the daily chart. And my current position is the $22 put, and this is a naked put because I do intend to purchase these shares. If you didn't want to put up all the money at first, you could definitely buy a little bit of protection, which I may or may not do somewhere down the line. But for now, it's just a naked put to acquire these shares at $22. But I did receive an $86 credit here, so you can see my actual purchase price is at $21.14. Right in that price range where I was talking about uranium being a buy. Now my expiration here is on 19 November, so I would have to wait quite a while to purchase those shares. Otherwise, I would just keep the 86 cents if URA did close above that $22 point, which I do expect that it will. Let me know down in the comments section what you think of uranium. Is this bull case going to be a true story going forward? Or is uranium just seeing a small short-term spike and we're going to see a move back down to the lows, similar to what we saw either prior to COVID or during COVID? It certainly could go either way, but it seems like the current price action is pointing upwards and that there is significantly more upside than there is downside currently, in my opinion. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.